Before we start, just understand this is not a signal service. Everything you see here is for educational purposes only. Trading involves risk, and the goal here is not to follow trades, it's to learn the process behind them.
Good morning, and welcome to I'm the Trader Capital live trading floor. It is Thursday, August 20th. First and foremost, all glory to the Most High God. Let's bow our heads for a quick prayer. Our Heavenly Father, we thank you for your grace and your mercy. We thank you for another opportunity to try again to learn and grow in these markets. Father, we ask that your will be done today as it is in heaven. Father, we ask that you give us the heart of a giver and make us a lover of our neighbor. Please let me not lead anyone that listens to me astray, but use me as a vessel to bring your children back onto you. In Jesus' mighty name we pray. Amen. 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 Can the church say amen? Amen. Let's begin. Before we jump into the say this, there was a time I used to sit down at the charts with no real plan, jumping between strategies, losing, blowing accounts, second guessing every entry, and honestly just hoping that the trade would work. And that's where most traders are today, not because they're not capable, but because they don't have a structured process. The biggest pitfalls that causes traders to fail is that they have no knowledge on money, they don't know how to lose, they don't know how the markets operate, and they don't have a winning model. 90% of traders fail, all 90% are plagued with one or more of these pitfalls. Today, I'm going to show you the 3 pillars that every trader must have in their trading to survive and thrive in the financial markets, so you can join the 10% who succeed and fast track your way to the top 1% of the wealthiest people on this planet. It's called the 10% to 1% club. Let's go. Woo! But before we dive deep into the 3 core pillars, when you step into this arena, on this battlefield, you must first have 2 crucial realization. Realization number 1, trading is war. This is not a get rich quick scheme. This is the hardest thing that you will ever do in your life. Realization number 2, all traders are money managers. As a trader, your ability to manage money is vital to your survival in this industry and in life as we know it. Most traders think that success in the markets comes from finding the perfect strategy or catching the biggest moves. But the reality is, trading success is built on 3 core pillars. First is money and mindset. This is the foundation of success. Then is risk management. This is the holy grail of trading. This is what will keep you in the game long after everybody else has quit. And lastly, we have trading edge. This is where all traders start. I know this because this is where I started. That's why in today's session, we're going to hone in on your trading edge. Now, everything that we do here is built around one thing, and that is confidence in your trading edge. And I am the Trader Capital. Our confidence comes from 3 things. First, it comes from understanding how the market actually operates. Not what social media says, but how money truly moves. Second is having one trader model. One model with IPDA signatures that we trust and execute on a consistent basis. Third is having a plan and a process, because without a plan and a process, you're just reacting to price and you're winging it each and every time. And this right here, this session, this is where we focus on the 3rd piece, the process. So many people lose confidence in trading and in life because they simply don't have a plan. There's no process they're following. There's no procedures and protocols that they're abiding by. They literally are just winging it. And they wonder why they can't get consistent. They wonder why there's ups and downs in their equity curves. They literally can't figure it out. The uncertainty of not knowing exactly what you're doing, how you're doing it, why and when you're doing it in the market will cause you to fail in trading. Confidence and certainty are key if you want to be successful in trading, and it's your responsibility as the trader, as the analyst, As the fund manager, it's your responsibility to attain that confidence, not only in your model, but also in your processes. So what I want to do right now real quickly is I want to share with you the process that we teach all our analysts at I'm the Trader Capital, and then we'll see that process live in action. This is the 3-step trading process. Step 1, condition. This is where we determine our bias. Before we even think about entering a trade, we need to know the market program. Are we in a buy program or sell program? This is where the market shows its hand. Then we have step 2, stage. This is what sets up your trade and what does your trade look like. There are 2 types of trades, retracement setups and continuation setup. Then we have step 3, execution. This is how you're going to enter, manage, and close the trade. At I'm the Trader Capital, we have 4 entry criteria before executing. I'm not here to force trades. I'm here to execute my plan step by step in real time. All right, let's get into the live trading flow. Now, as you're watching, don't just look for entries. Pay attention to the process behind the entries, because this is what will get you into the 10% of traders who succeed. And if you want to go further to the 1%, well, that's where we break down all 3 pillars inside of the program. I used to think that winning trades built confidence, but it's not the wins. It's knowing exactly what you're doing, when you're doing it, how you're doing it, and why you're doing it before, during, and after each trade. And that is what we're building here. Let's begin with our daily trading processes. Weekly target going to this week, as always, is 3%. Mental check-in, feeling generally okay. All right, excited to see what price action has in store for us today. Excited to continue to grow and get 1% better. My neck, like this whole side of my body, the left side of my body, oh my goodness, it's in so much pain. I don't know how I slept last night, but it's in so much pain. But other than that, I'm Gucci Poochie. I'm just focused in the grind, in the hustle, just taking one small step after the other in the direction of where I'm going, and pretty much that's all I can do. Anyway, I accept any risk that comes with trading today. I understand that trading comes with real risk, and that losing is part of the battle. Thursday, August 20th, we're almost done with August. Bloody hell. News, we had high impact news come out at 8:30, and medium impact news at 8:30, another one coming out at 10:30 and 4:30 today. So we have news today, making it an optimal day to take a trade. Risk going into today, we're at 0.25 of account size, and we have a max of 0.75 per account per day. Weekly program going to this week has been established as a sell program. Let's go ahead and review price action overnight to see if anything has happened to change that for us here. I'm the Trader Capital. Then we'll go ahead and, as usual, adjust our higher time frame ranges and proceed with our 3-step trading process. Whoa, mate. Ooh, fudge cakes. I caught this trade here during lunch session. That took me to break even on the day. I mean, a little bit better than, made back my losses and took me and brought me up on the day. It was right here, this one. During 12:30. Anywho. As you can see, nothing's really happened in price to change our weekly program, okay? For our weekly program to change, or for us to flip weekly bias, price will need to come all the way up here and take Monday's low, which is nowhere near. Okay, so maintaining a sell program, we have this sell side in here, which was the low, 241, the low of this candle, 240. So we do take it. $20-day is Gucci Poochie. Low is good. 3 days. 1, 2, 3. Previous day. You're using previous day, right, to determine your condition for this morning. You're taking previous day's low, so you'll be coming into today in a sell program alignment with the weekly as well, okay? So we're leaving this inefficiency in here. Digging in more into this inefficiency in here. Let me see something real quick. Okay, see this one. Over here, current price action, which is obviously the 9:15 candle. Lowest low, the highest high. Gives us our dealing range. We have the high, the midpoint, and the low. Oh my goodness, what is happening? Above dealing range, we've got previous day's high. And Tuesday's AM session, open range buy side, still in play. Above that, we have a new week opening gap. Below dealing range now. Did we take this? It was this low right here. 241 was the low of this candle. 240, we do take it. Take this low right here. We have this new week opening gap below price as a potential draw on liquidity. Obviously on the 15-minute, we have some liquidities first before we get to that down here. We're about to kick off. Like 30 seconds. Oh, I mean pain, you know. I mean so much pain, mate. Oh, my goodness. Above us right now, we have previous day's low and we have 3-day look back low. And we're kicking off. Ding, 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 ding. 9:30 open. Open range gap is above price. Okay, so we gap down. We have a discount gap down. Decent size. Not the biggest, but it's a decent size, medium size. Let's see what today brings. Still debating whether I want to take a trade today or not. Has my first 3 days been great? Has they been Gucci? Let me see. If I do take something, oh, let me still give that one a break. Still be on this one because it's down like $100 for the week. If I do take something, if that's a big if, I'm trying to see if I've had a good 3 days. Monday we took a loss, but then we were liquidity and ended up going our direction. Tuesday we took a winning trade. Yeah. Wednesday, which was yesterday, we took a loss and a win. Now it's Thursday. What y'all think? Should I take a trade today? Top of the morning. Good morning. Good morning. Should we trade today? I wouldn't say the first 3 days has been the greatest, but in terms of price action, it's been fine. It's been good. Should we take a trade today? Should we? Should we? Let's see what the market's saying, though. Let's see what the market's saying. Top of the morning to ya, Mr. West. Itching to constant encroachment of open range gap here. As the Espanol will say, no, that's Portugal. Bon dia, buenos dias, bon dia. However you want to say it, you know what I mean? Oh, let me go ahead and do that. 19. What's today? Today's the 25th. Wednesday. Yes, 19. 6. Let's do it. Let's get some action up in here. Gatherers. Oh, I can't even laugh because it hurts. Gather. I don't know if I'm spelling this right. Bruv, this is some crazy shit. Okay, so I was right. It just looks so wrong. Is a repetition of those two letters, isn't it? Let's go, hunter gatherers! I hope you got your hunting boots on and you got your equipment ready. Because we're going on a hunt today. Today we're going on a hunt. We are hunter gatherers, okay? We are hunter gatherers. It's eat or be eaten, kill or be killed when we step into this arena. So you best come prepared. Okay, you can't slack around. You're gonna get your head chopped off. Somebody's gonna have you for dinner, mate. Somebody will have you for dinner. This is survival of the fittest here. Okay? Buenos dias. Bon dia. What it do? Good bloody morning. Hip hip cheerio. It's Thursday. It's Thursday. It's just a regular Thursday. It's not any significant Thursday, to be honest. But it's Thursday. It's a good day to have a good day. Every day is a good day to have a good day. God damn it. Excuse me. I don't mean to use the word Lord's name in vain. I need to stop that. I need to stop doing them things there. Put some respect on my man's name. You know what I mean? I gotta do that. I apologize. Still waiting for condition, all right, for one side of our daily range to get taken, which will establish our daily condition. We already have our weekly condition, okay? So if you see a setup inside of the range and is in line with your weekly and you're confident enough to jump in there, hey, I'm not going to stop you. It's your trading, isn't it? It's not my trading. I'm just here to support you, you know? Here to offer the guidance, the support, the accountability partner. You know what I mean? Oh, my goodness. Oh, Lordy. It's a good day for a good hunt. Happy hunting, folks. Happy bloody hunting, mate. We hitting equilibrium of dealer range. Let's see here. We've taken previous day's low, last 3 days low. Okay. So potentially price could want to retrace into a premium of those ranges to continue lower, right? I finally know what that means. What means? What do you finally know what it means? Equilibrium. Yeah, buddy. What is it then? Let's take a test. What is equilibrium? What's equilibrium? The pressure's on, Di. The pressure's on. You say you finally know what it is. What is it then? What is it then? Tell the class. Tell the class. We want to know. We want to know. No pressure, but the pressure's on. Pressure will make you feel. I'm dead. As long as you know, though, it's just basically the midpoint of the range. It's the midpoint of a range. Yes, exactly. Yeah, yeah. It's just the midpoint of a range. It's the 50% of the range. Yeah, 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 yeah. Oh, that's so funny. And above equilibrium is a premium, okay? Best selling condition will occur there, all right? And below equilibrium is a discount. Best buying conditions will happen in the discount. Okay, it doesn't mean you can't, flip-flop and sell in a discount and buy in a premium. Just be aware of where you are in the range. Buy high, buy what? Buy low, sell high. That's oh, fuck, I don't know what it is, but this whole side from my neck down is in so much pain. Oh my God. It's in so much pain. Pressure will make you feel until the sun rises. No, I was for sure. We take buy side here, market structure shift back below. I'll be looking to see if dealing range low gets taken, if what I just explained happens. Ooh. If we take the low here, market structure shift above, then I'm looking higher. I'm looking higher. I'm looking higher. I'm looking higher. Oh no, this is one of them still going lower thing, and it is a failure swing right here. So I'm still looking lower. Actually, I'm still looking lower until we take buy side up here. Until we take the short term high. Sorry, still looking lower. I wasn't looking. I don't know if it came back in here once we took that short-term low. If it came back in here, it would have given you an entry. I wasn't paying attention. Oy. I didn't say I can explain it. I said I know what it is. I didn't say I can explain it. God damn it. Oh, excuse me. Oh my goodness. Forgive me, Father. If using previous daily low to set condition, yes, being a sell program, price is selling off a breakout at 50% level. Yeah, you can combine the two ranges. Yeah. Right here. What did they give you? Did they give you anything? Definitely would be getting tagged in there if it wasn't tagged on this candle. But this failure swing here, mitigation. Two types of institutional patterns we look for: breakers and mitigation. This right here is a failure swing. I'm going to draw it out here. So we come up into the key level, equilibrium, 50% of the dealing range. We come back below it. We create a short-term low here, this short-term low. We come back into the key level, fail to take this high here, the short-term high, causes a market structure shift back below. That's a failure swing. Okay, because we failed to take this high here, and we caused the market structure shift back below. That's what I'm watching here. But yeah, you can literally combine the ranges, right? Because it's from a premium to a discount to a premium to a discount based on ranges. Ah, just watching though. Let's see how it plays out. Now, if it was a breaker now, a breaker would be like this. On the 30 minutes. Oh, me chest. All right, let me see. Is it above the equilibrium? If it's above the equilibrium, it's a premium. Yeah, then it's a premium. Yeah, premium to sell. Yes, premium is where the best selling conditions will happen. Buy low, sell high. Okay, premium is a high, so you want to sell. Discount is a low, so you want to buy. Yes, those are the areas where the best selling and buying conditions will happen. It doesn't mean that just because you're in a premium, you're only looking to sell. You can also buy in a premium. You just have to be aware that you're buying an expensive price. Yeah, exactly. If you're looking for a sell in a premium and it fails, it's potentially giving you more information that price wants to continue higher, right? Are we talking the 6:30 a.m. candle? You're welcome. De nada, de nada. The order block you're looking for on the 30 minutes, is it that 6:30 a.m. candle? Or are we looking at this whole thing here? Yeah, okay, cool. Very good. Let's see what this trade is saying here. Stop would be on this, stop will always go on this swing high. The leg that failed to take the short-term high. This is what we're looking at right here. Okay, the 430 would be a break. Okay, I figured. What am I looking for here? Entry and exits. -1 would have been hit already here. Stop, remember, stop remains the same. We only start moving it at 1.5. Let me see how many contracts this would have been. This is inside the range trading based on my dealing range. However, using previous days range, all right, and the previous 3 days high and low, okay, is a retracement or continuation sell setup for those ranges that I just said. Excuse me, it sounds a bit confusing and I didn't explain it very well, so I'm sorry. These are things that I kind of sometimes I pray for, you know, just for a better communication, better understanding, so I can explain things better. Anyway, would have given us 3 contracts. 2 would come up at -1, terminus at 1.5, which is where would be adjusting stop, which we're on the way to 1.5 right now. So this failure swing here, that's the same thing that happened here, right? So at key levels, when we have time and we have price aligned, right? We have time, which is right here, 9:30. The price level is equilibrium, 50% of our dealing range, okay? Basing it on a previous range or like previous day's range and the low being taken, right? We're anticipating price to continue in that direction. We've come into a premium, not of that same range, but of a dealing range, still in a premium compared to where the low is, right? That's -1.5 getting smashed right there. Stop now will be adjusted to 50% of this leg here. This is the leg we're using for our profit taken targets, and adjusting our stop loss. So it will be right here. Our stop will be right here. So we're waiting for time and price to align. All right, and when that happens, we're looking for key institutional patterns around that key level, okay, to tell us where price wants to go to next, right? We have 2 institutional patterns that we look for. We look for the breaker and we look for the failure swing mitigation. This right here is a mitigation pattern. Now, if price had did this, come up into that key level, which is to the 50% of the equilibrium, come down, come back up, smash that short-term high, then come down and taking a market structure shift here. This will be a breaker pattern. We're looking for price come back into that short-term low for an entry. Come back in here for an entry. So this is a breaker because we took a short-term high above that key level and caused a market structure shift back below that key level. Here we failed to take that short-term high. Makes it a failure swing, all right, mitigation. -2 getting smashed. This trade would be at break even now. Okay, if you had more contracts, you only allowed us 3 contracts. If you had more contracts, you'd be out already. Okay, but here at -2, we move to break even. We'll see what else this trade is going to offer us. So these are the only 2 patterns that I'm looking for at key levels. When time and price aligns, I'm looking for these 2 patterns. First, I'm looking for it in the direction of where I'm going in price, right? That's always going to be what I'm looking for initially, in the direction of where I'm going in price. Here, using previous daily low, previous day's range, right? We're taking the low, so you're looking to go lower, all right? So if you do take the sell, you're trading in alignment with previous day's range, right? Also in alignment with your weekly program, which is also a sell program, right? So we're looking to be a seller of this market. Okay, so you don't have to wait. That's why I have multiple ranges on my chart, because some days, sometimes the one range that you're focused on, neither side might get taken, right? And if you're okay not taking any trades that day, then okay, you're okay not taking any trades. There'll be nothing there for you, right? But if you want opportunities, right, you use at least 2 to 3 ranges, at least 2, at least for sure. Quite off if you're new, just use 2. And if neither one offers you anything, then you're good. That's it. That's you for the day. Come back another day and keep it pushing, right? But 2 years plus of experience, you can use a little bit more than two ranges, okay? If you have a better understanding of price action and where it's going. Yeah, as I was saying, this is why I have multiple ranges, okay? I probably potentially have too much ranges, but I can see the difference in what each range is doing. So for me, I don't mind, but like if you're new, I just have two ranges, okay? Just two. Three max, but two is more than enough for you. 950 macro kicking off. So based on previous day's range, right? This setup here coming into a premium is valid, right? Because you're looking to sell in a premium and we come into a premium of dealing range. That makes sense. Right now I'm targeting dealing range low, right? Without previous day's range or the 3-day look back range, right? I would be trading inside of a range for my dealing range, right? And that's the lowest probability setups when you're trading inside of the range, because the market hasn't told you which side is going, so you don't know which side to focus on. Yeah. Negative 2.5 getting smashed. That would be your morning right there, right? Do you need any more? Oh, really? You're done. Go about your day. Enjoy the rest of your day. Come back tomorrow if you want to, or take tomorrow off. Good week so far. You know what I mean? We have a breaker, we have a failure swing. Breaker, mitigation. Breaker, mitigation. Those are the two institutional patterns we look for at key levels, all right? When we have time and price aligned, that is what we're looking for. That is the confirmation that we're waiting for price to give us. That yes, now is the time. Let me delete this fib, make this cleaner. We have time, price, alignment. When time meets price, we wait for institutional patterns, right? We only have two, breaker or mitigation. Now, for me personally, okay, I like for both legs to touch the key level. They don't have to, right? Like this one right here. You can use this as a whole. This leg as a whole comes up to and through, back down, fails to touch that key level equilibrium of dealing range, comes back down, causes a market structure shift right here. You can also use that, right? But for me personally, I prefer for both legs to touch that key level, okay? It just, for me, something extra for me that adds a bit more confluence and more comfortability for me personally, but it doesn't have to. All right, it doesn't have to. Hopefully that makes a little bit of sense for the folks paying attention. All of these will make more sense if you've seen the beginner training video. What I'm saying right here. If you haven't, just keep showing up. Oh, excusez-moi. Get rid of this. Get rid of that. Get rid of this. Get rid of that. Be gone. Delete that. Delete that. I'll keep this there for now. I would have given you -3. Okay, stop will still be at break even. Anything extra there is just a bonus. Still would be in here, right? Still would be in here. Break even still. Break even is up here. Okay, it's got enough room to do his thing, right? Ting, my ting, my ting. I'm seeing this right here. Hold on, bear with me. Is that a high? The high of this candle. Yeah, it's outside of that. I'll still watch it though. Hold on, I'm gonna watch it. I would prefer the swing high to be at least on the 930 candle. 950 candle. But let's see what I go on here. $10. Let's get opening range. Let's get opening range ready to go. Yet another range that I pay attention to. I have we'll start from the small to the I have open range, first hour's dealing range. Then we go my dealing range from 12 a.m. to 9:15 for the day. Then previous day's range, last 3 days range, previous week's range, and 20-day look back range. That's about what? 5, 6, 7 ranges on my chart. 7 ranges on my chart. But it still doesn't look too messy though. It doesn't look like a lot going on. I used to have this chart looking bad before, but now it's kind of it's cleaner, you know, it's just the lines, just my time and my price. That's all I need. You know? But there's 7 ranges I'm looking at. But this will go to like let's say 12. 7 ranges, you know, I'm an overachiever. You don't need 7 ranges though, you know what I'm saying? I'm just me, you know, that's what I do. And I think I have the experience level to handle 7 ranges, okay? I have the experience level to handle it. If you don't have the experience level, then like I said, start off with 2, and then as you graduate and you mature and you gain more experience, collect more data, then you can start adding one by one. You add one, build up on that three, build up on that, collect the data on using the three. Then when you're comfortable and confident using three ranges, then you add the other. Right? If you're fine where you're at, you're fine where you're at. You don't need to progress, right? 10 o'clock. It's whatever works for you, really and truly. You know what I'm saying? Solo sport. Figure out what works best for you, and just stick with it. Don't try to copy others. Right? Look for others for inspiration, but don't try to copy them. Do it yourself. Find out which works for you. You can't use my experience and my data and feel confident and comfortable using my experience and my data because you didn't collect it yourself. You can use it to add confluence, but you still won't be confident and comfortable because you didn't gain the experience yourself. Da 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 da. For engagement purposes, I'll be waiting until this 10:30 news comes out. I don't require it to come out to enter the market, but like I said, this week I'm walking it forward what I noticed from last week's back testing and data collecting. So I'm walking it forward this week to see how it goes. Okay, so I'll be waiting until 10:30. This news, medium impact news, comes out to see where the setups, if there's a clean setup that occurs after that news comes out, that news release. Once again, that does not mean you cannot trade before the news comes out. Okay, especially if it's a medium. The only three news you can't trade before are CPI, NFP, and FOMC. Those are the only three news. I do not recommend taking a trade before those news. Just wait till they come out and then anticipate your setup, look for your setup, okay? But other than that, all the other news, you're more than welcome if you feel up to it to trade before the release of the news. But for me, like I said, I'm collecting data on something. That's why I'm being specific on what I'm looking for this week and when I'm looking for it, right? The time I want to see it occur. Because obviously this trade here is before that 10:30 news release, okay? So like I said, personal preference. Pick what works for you, what you're comfortable in what your risk tolerance allows you to do, and do that. And don't give a damn what other people got going on. Because it works for you, it works for you. It's all about it working for you. Being in a community doesn't mean having one mind, We all have different minds. We're just a collective on the same journey, going to the same destination. Well, destinations might be different, but how we're getting to our destination is trading, right? We're using the same tool to get us to our different destination, right? So I don't want a community that's like one-minded. I don't want that. I don't want that. I want different opinions, different perspectives. All right. But in terms of our core understanding of the market, that I need to be solidified the same, right? I need that to be how we're looking at the market needs to be the same. How we engage in the market can be different, but how we're looking at it, it needs the core essence needs to be the same, or else it just won't work, mate. It just won't work, mate. It won't work for me personally. It just won't work for me. Not that I think that, our way of looking at the market is the only way and is the best way. It is the best way, but I'm just saying it's not the only way. It's not the only way. I'm part of the ICT quote. But nah, I'm not though. I believe in its concepts. It's the only thing that's made me consistent, and is the only concept that's allowed me to actually understand why these candlesticks do the things that they do. So don't know how you feel about him, but for me, he's good in my books. No doubt, no questions about his concepts. Because I've done the work, I've collected the data, I've seen it with my own two eyes. And once you see it, you cannot unsee it. Like he says, every day, every week, and it won't stop. And it won't stop. Ooh. Vocals. I know you heard that. I know you heard them vocals there. What is happening here? What is happening here? My goodness. Yeah, the skinny lady is singing. We love when the skinny lady sings. You know, that means it's good news. We don't want to see the fat lady singing, though. We don't want to see no fat lady sing out here. Oh, I said that wrong, didn't I? Damn, I don't know how to use these slangs. These abbreviated slangs. Laughing my ass off. Laughing off my ass. Laughing my off ass. That's what I said. Oh, the skinny lady singing. You know what that means? That's good. Every time you hear that skinny lady sing, that's good news around the corner. It's coming. But when that fat lady hits the stage, nah, we don't want to see that. We don't want to see that fat lady. I know where I went wrong with yesterday's trade that we took a loss in. It wasn't really a valid trade. Like we didn't get that 2 touches on the key level, right? So it was a rushed trade on my behalf. This probably done what it needed to do there. See if it does anything more. We know that break even's here. Comes and takes us out. It's already given us -3, so. That's 1010. Oh, 950 macros complete. Completado. I remember it. Completado. Man's a native Spanish speaker out here in these streets. Yeah, completado. 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 No? What the hell? Okay, completado. Completado. Like that. Completado. Bloody hell. No E. Completado. 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 My God. Oh my goodness. Soft on the T. Completado. Is that soft enough? Is that soft enough? I'll be looking for a retracement if we take this high heel. Completado. Completado. Like that. Completado. Compleado. Or is the T silent? No E. What, in the ple part? Completado. Okay. Completado. Like that. I have to say ple. Yo, send me a voice note of that. Completado. Like that. Completado. 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 Bloody hell. Completado. We get a market structure shift above here. This one, I'll be watching the retracements out. Let's see how it goes. Here comes the audio. Completado. There we go. Hello, play the thing. Completado. There you go. Completado. Completado. I got it now. Completado. Still being here, by the way. All right, still watching this. $10.15. Let's see if we get any setup here, because post 10.10, next best opportunity that I found will be 10.15 kicking off. So now I'm still data collecting on should I wait till after, or should I use previous structure into 10.15? That is still a bit tricky. Still haven't collected enough data on that yet. We still haven't established a daily condition yet. Neither side of dealing range has been taken. COMPENSATED. Coming to a premium again here, right? Coming to a premium again here using open range, high and low, and discount. Premium and discount is the yellow line right here is for open range. Come up into it, right? Same thing that we got here. The failure swing is the same thing that you're seeing right here. Came up, came back down, swing low here, swung back up, failed to take this high here, short-term high, market structure shift back below, right here, for the continuation to the downside. Boom, boom. Entry was on that 15-minute 10-15 candle start right here. So oh no, I'm still collecting the data post macro. Post macro, I'm still collecting that data. But let's see what this one would have in store for us here. Same thing that we saw up here, using dealing range equilibrium. It's the same thing we're looking here, looking at open range equilibrium. All right, -1 smash there. See the contract size it would have given us. 3 contracts here again. So aiming for 1.5. Let's see if we get that. Once you enter the market, right, within 5 minutes, right, it needs to start heading in the direction of where you entered. Okay, that's how you know you're on side and you're in a high probability setup. So this is where the trade was confirmed. This candle is potentially where you would have been tagged into it. Let's count 5 candles after that. 1, 2, 3, 4, 5. Right after that, we moved away from our entry into the direction of our targets. That's what you want to see when you enter the market. Once it starts to be more than 5 minutes in the same area, that's when you start looking, okay, potentially where could I be offside in this trade here? Because the characteristics I'm seeing right now is suggesting that this is in a high probability setup. Even here with the entry, once we were tagged in, boom, straight away price moved away from that area, which is what you want to see, straight to our first profit target. All right. So the signs and characteristics you see in price, they give you information. So start paying attention to those once you enter the trade. Because once you enter the market, there's nothing, it's out of your hands. All you can do now is just make sure that you're on side. And that you can do that through paying attention to the candlesticks, right? The open, the high, the low, and the close. Anyway, -1.5 getting smashed, we would be out of this trade already, okay? We would have hit our terminus, so we're watching to see what else this trade will offer us. Right now, our stop would be at 50% of this range here. Same setup here, using equilibrium is the same setup here using open range equilibrium. All right, same thing, same thing. So that 50% level is pivotal, is a key level. All right, you can frame entries and setups around that 50% level, not just the high and the low. Taking open range sell side here, our session condition has been established as a sell program in line with the weekly. Daily still hasn't been established though. But this would have did what it needed to do for me personally. So you can go ahead and delete that and watch it from here. You get it now? Yes, it's making sense, right? It's making sense. It's making sense. You know why you get it? Because you're showing up every day, Dai. Yeah, exactly. You're showing up every day for yourself, for your family, for the people around you, for your country. That's why it's starting to make sense. Wait. What are we waiting on? What are we waiting on? What? I said you're showing up for yourself, for your family, and for your country and the people around you. That's why it's all starting to make sense because you're showing up every day. Starts to click once you start seeing it every day, day in day out. Your eyes start to go to certain things. You're like, ooh, I've seen this before. This is interesting, huh? Then you dig deeper and you collect the data. Hey, that's good. That's good. That's good. That's good. That is a result of your dedication right there, my friend. It's clicking. It's clicking. I love that. I love that. When it started to click for me, ooh, I was like, what? This has been there the whole time, and it does this every day, every week, and it won't bloody stop. Stop playing with me, mate. Stop playing with me, mate. You start to even enjoy this more. Like once it starts clicking, this becomes fun. Like it's like a treasure hunt, you know? You want the next piece, the next puzzle piece, you know? It starts to be enjoyable. And that's how trading should be. It should be fun, exciting. You should not exciting, but like when you're in the trade, it shouldn't be like emotional, right? But like when you see certain things in price action, it should be fun, it should be exciting, you know. When it starts to click, ooh, hone in on that feeling right there, die. Hone in on that feeling. Soak that feeling up. Soak it up. Because soon it's gonna be like, oh, he's doing the same thing over and over again. It's gonna be boring. Hone in on that feeling that you're feeling right now. Hone it in. Enjoy it. Soak it up. This bad boy is doing the same thing every day, every week. Going from a premium to a discount to a discount to a premium based on the ranges. It's following the higher time frame premise, right? Even when you're seeing a retracement on the higher time frame, it's potentially going into a higher time frame discount. All right, we have our 20-day look back, which is a longer time frame range, right? We've taken the high, potentially price could be retracing into a 20-day discount, right? To then continue to take, these highs up here, all-time highs. Doesn't have to do it though, right? Doesn't have to do it. But it's just an idea that you stick with until the price shows you otherwise. That's what I'm anticipating, right? Anywho. We love it when things start to click, you know? We're going to debrief though. We're going to debrief. I want to hear what's clicking. Me want to hear it. Me want to hear it. You wait till post 10:15, then obviously bing bing, taking that, come up into a premium, short-term high, market structure shift here, continuation to the downside, potentially. Let's see though. Let's watch it. Let's watch it. Let's watch it. I'll be watching a continuation sell. Should we take this short-term low here? Squeeze me. If you like to scalp the market, open range, high, low, midpoint, that's all you make. That is all you. Take an open range sell side, so you've established your condition as a sell program. You wait for that retracement into a premium, okay? It came back above 50% of that range. We take a short-term high here. Market structure shifts back down below the key level, okay? So we're watching this continuation sell setup here. See how it plays out. You would have definitely got an entry there. Let's see. Few contracts on that, so taking it to a -1. Well, I would be. I don't know where you would be taking it to. Potentially maybe 0.5, because you're scalping, right? You just want local movements. You take something about 0.5 and then -1 if it gives it to you, and you do as that. So your entry was here. Let's see what the next 5 minutes is saying in price action, if it's going in the direction of where you'd want it to go once you've been tagged in this trade here. So that's 1 minute right here. This would be 2 minute, second candle here. I want to see it move away from our entry point, right, into the direction of our profits. Give it 5 minutes, let it do its thing. After 5 minutes and it's still not doing it, that's when you start to look for points where you could potentially be off. We have an inefficiency in here. I want to see price stay below that. This OB up here, body closure in the main threshold would be the last line in the sand for me. Doesn't mean close the trade. We've established that these past couple of days, right? If you want to close the trade, then you're fine with that. That's on you, right? But for me personally, I wouldn't be closing any trade prematurely. Until the fat lady's singing, I'm still in there, all right? Just because she's entering the stage doesn't always mean she's about to sing, you know? You have a 20% chance she might not sing, and an 8% chance she's singing. Hey, first hour of trading. It's here, it's upon us. Same high though. Now I'll be looking to see what I can do in this bit after the news release, the 10:30 medium impact news release. Not saying that I couldn't have taken any of these before. I could have. This one probably not yet. This one after 10:10, definitely not yet. I'm not there yet. We're still collecting the data on those. So far 60-40. 60 meaning winner, 40 meaning loser. I'm good with those odds. So 1, 2, 1, 2, 3. This is the fourth candle right here. Body closure above principal encroachment, which is the midpoint of this inefficiency, would be a warning sign, right? But so far so good. We're respecting it. I want to see that small portion that it left open remain open if you're in the setup, okay? $5 and we still haven't headed in the direction of where we want price to go. So now is when you pay attention. Okay, what's happening? What am I seeing? What are the signatures here? Like I said, body closure above the midpoint of this inefficiency is our first warning sign that potentially we are offside. Our last line in the sand for this trade is body closure in the main threshold of this OB here, bearish OB. You have to get through this inefficiency first though. The SIBI, sell side imbalance, buy side inefficiency. Wicks are allowed to do the damages. The bodies is closing outside of that inefficiency. So far, so good based on this one candle here. But let's see how this one closes. Wicks do the damages, bodies tell the story. I want to continue to see the bodies close outside of this inefficiency. Characteristics I want to see. So far, so good. Nothing to fear here in this setup. If you're in it, nothing to fear. If you entered here and price retraced up here for you, there's nothing to fear. So far, the price action is telling you that you're good where you're at. Don't worry about it. This is for the scalpers. We're watching this for the scalpers. Potentially, you could take something off up 0.5. All right, because you're looking for a small movement in price for scalping, right? You're just trying to get your little piece and get out. You're not trying to stay for the whole, just get your little bite size, and you're out. So for scalping, you're fine to take something off at 0.5. Nothing wrong with that. Like I said, I'm gonna have a bread and butter setup that just takes everything off at 0.5 anyway. Bread and butter puts food on the table. 0.5, negative 0.5 puts food on the table. Okay, your family is fed. You're fed. We still haven't established a daily condition yet, all right? So keep that in the forefront of your mind. For me personally, I'm saying it for myself, okay? I'm saying it for myself. Oh, oh, oh. Still no need to panic until we start seeing body closures above the midpoint. That's when the alarm bell starts, ringing. We've had that here. All right, let's see how the next candle closes. So you have your alarm bells ringing. Doesn't mean close the trade. Just a potential early warning, early sign that, hey, I could be upside here. Still doesn't mean panic. Touch the open of that OB now. Let's see if it's reactive. The stop is up here, by the way. Okay, stop is up here. Once you start paying attention to the candlesticks while you're in the trade, there's no need to like fear or panic, right? Because you're letting the candlestick tell you what's going on, right? What's happening. You need to distract your mind, focus on the candlestick. Don't have your P&L, especially monetary value, on the chart. You're staring at it. Look at it in ticks, in percentages, everything but the monetary value. Because we don't want to see that. That's not what it's about. This one candle could potentially take you out without a warning sign, without a last line in the sand. And that's okay. Right there, you'd be getting smashed out. That happens. You had an early warning sign here, okay? We didn't have a last line in the sand, but it doesn't have to give you anything. The market doesn't owe you anything. She owes you jack shit, mate. She doesn't owe you nothing. She doesn't owe you your entry. She doesn't owe you your take profit target. She doesn't owe you your stop loss. She don't owe you shit. A lot of people come with an entitled mindset in these markets, and they think that, the market should listen to them. Like, what do you think this is? You cannot have entitlement out here. If the does what if the wants. You cannot control that unless you are, behind the scenes. You are part of the, the clique that do control this thing. Then obviously you can control it. But we're not part of those. We're not part of them. We're not part of the clique. Ain't nobody fresher than my motherfucking clique. 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 I said, look around then, dude. Like yeah, but I'm not seeing the swing high, so nah. Maybe a different time frame, yeah. Lower time frame, yeah. But we're not on that. We're not on that right now. Nothing for me here. But we're in hunt mode, right? This is another instance here where we only just get one touch. We don't get two touches. I would have preferred this swing low to at least touch the key level here to consider this a retracement setup here, okay? But it doesn't always have to touch it, right? That's just my preference. This, we're talking about this swing low right here. As you can see, we come down, we come up, we come down, touch the key level, take this short-term low here, market structure shift back above here. That's the entry point. For me personally, right, I would have preferred, we only had one touch of the key level. I want to see two, at least two. I want to see two, personally. This is what I would have loved to see. Come down, touch it, come back up, either take the low or fail to take the low here, doesn't matter to me, and then the market structure shift here. That would be nice for me personally. That's what I would have liked to engage in. Hmm, 9:30. But I haven't done it with using outside structure. I like the structure to be inside after the time, then I want to see inside the time. But yeah, nothing wrong with watching this though. Just seeing what the data is saying, but I see you. I wanted to see another swing high here, then potentially I would have engaged in that, but this is not a swing high. I don't like that. Not for me, not for me, not for me, not for me. Not for me, not for me. Might be for somebody else. For this girl, it ain't for me. Doesn't mean we can't watch it and collect the data on it though, right? Just because it's not for me today, doesn't mean in like 2 months' time it won't be for me, right? You know what I'm saying? With enough data and enough experience, who's saying it won't be for me? Nobody but me and my data. Still haven't established a daily condition yet, all right? So for the day, price don't know what it wants to do. I don't know what price wants to do for the day. I know for the session, it wants to continue lower till we take here, buy side here. I know for the week, it wants to continue lower until we take buy side up here. But for the day, I personally don't know. But if you're using previous day's range to determine your condition for today, then obviously it's established it for you as a sell program, right? But for me personally, how I establish my daily condition, I'm still inside of the range. That's why it's a little bit more trickier today. Okay, it's a little bit more trickier, more confusing price action. Okay, because for me personally, I'm inside of my range. Okay, so it's tricky, dicky. If I don't take anything today, I'm not mad at it. Okay, I've had this decent week so far. Okay, I've seen everything that I need to see each and every day that we've been here. And the small minor refinement that's causing the trader to take losses, we'll fix that for the next week and we'll come back stronger and better, right? 1% better for that week. So yeah, just a matter of time now. I can feel it. It's just a matter of time. Like I'm starting to slowly get to the point of where I want to be. Like my obviously there's always more to learn and more to grow, right? In terms of what I'm looking for in the price action and what I'm doing here, like I'm starting to get to the point where I'm just like, okay, this is what I'm looking for, this is what we're doing. And I'm getting to the point where I'm hashing out final touches on the refinements for me, really and truly. And then it will be based on data collected, right? But for now, we're still refining our, what we have and what we're looking for, when we're looking for it to occur. Oh, it would have come and taken us out here at break even and the initial setup here. It would have come and taken us out at break even there. 10:50 macro is about to kick off soon. Let's see what it brings. If it doesn't give us anything, it doesn't give us anything. I'm content not getting into anything today. Oh, oh. Oh, my neck. Forgot about that for a while. Oh, I need a different chair, mate. Ow. This chair is just not that comfortable. It's not that good for my back neither, to be honest. Ah, 10:50 macro. 10:50 macro.
What are you telling us? What are you telling us? You got something for us or what? We are staying below dealing range equilibrium, okay? That to me is telling me that maybe potentially price wants to gravitate towards dealing range sell side. Because it's failing to make it above dealing range equilibrium, okay? We're staying in the lower portion. Even left a small portion of open range gap left open here. And we have our session and our weekly in line. So best trades will be sells for me. Let's see what we get here in this macro. Whole lot of back and forth today, this morning. Nothing too clear at all. Ah. Now stopwise, I don't have a swing here. So I don't... don't have a swing here to have a failure swing because there's no swing high here. So this probably not. Probably watch that if it confirms that. I would love to see the swing, you know. I would love to see the swing so I have somewhere to place my stuff. Right now I don't have the swing. Yeah, I'm watching this as a continuation sell. I would have loved to see a swing high here, but there is no swing high. Because each candle has a high. Yep, no swing. No swing, no swing. So I watch. I'm not going to rush into anything. Watching this, because I wouldn't even know where would I even put my stop on this swing high. Yeah. It wouldn't even make sense, mate. It wouldn't even make sense. It goes without me, innit? Would have to be at this candle high at least. Gives me this retracement, I will engage and be okay with the outcome. It gives it. Only if it gives it. Inside the range trading for me here. But I'm using other ranges to confirm this setup. And I'm accepting the risk that comes with it. Hasn't confirmed yet. Don't pull the trigger too prematurely, okay? We wait. Ooh, it's tiny, it's a tiny little one. But it has confirmed the retracement. Just gotta let it do its thing now. 2 contracts both coming off at -1. Just gotta let it do its thing now. We're looking at 4,750. Are you gonna give me the 50? It's not gonna give me the 50. Hold on, 4,750. Oh my god, can you come on, mate? There it is, 4,750. I always do this number -1. That's what I always do. And when you enter, that's what you want to see in the price action. That tells you you're on side. You don't want to see price diddy dally around. You want it to go straight up. But anyway, we have an inefficiency here that I'll be looking at. No prominent clear OB in here. Oh, thank you very much. We appreciate it. That was quick and easy. Less than a minute, less than 2 minutes, really and truly. We were in there and we were out. Let's see the outcome of that trade. I know you guys, 194 on the day, 194, bringing us back up. Thank you very much. Easy peasy, right? I waited for time, 10:50 macro. Price, we have previous day's low, which is the same as the last 3 days low, okay? We're in a discount of the range of first hour's dealing range, opening range, dealing range. We're in a discount of our main daily dealing range as well, right? Best buying condition will happen there. Is a retracement in terms of previous day's range low being taken, right? Waited for time and price to align, and I'm waiting for key characteristics, 2 institutional patterns that we look for. Here we had the breaker. We had the breaker because we traded down, up, down. We took a short-term low. We came up, took another short-term low, all right, below that external liquidity, previous day's low. Then the market structure shift back above it, okay? Because that's the breaker. We had this pattern right here. We came down to and through that external liquidity, came back up, came back down, took that short-term low below it, market structure shift back above. This just happened to have taken 2 lows, but still the same concept. Here, I waited for price to take that short-term high. When it comes back, that's where my entry is at. And I'm using this range here, this high and this low, for my fib extensions for my target taking and my stop adjustment, okay? So if we had more contracts, we still would be in this trade. A -1 stop will remain at the swing low still, okay? Let's see if -1.5 is on the cards for us. I want to see price respect this inefficiency and head higher. But this is what we had right here. We had the breakout institutional pattern with time and price, okay? With where we're at in the ranges as well, okay? You have to know the direction. You have to have a range direction already confirmed, okay? So you know what kind of trade you're getting to. This is a retracement setup based on previous day's range, based on the last 3 days range. Retracement also based on session, right? Opening range, session low being taken. But that was quick. We were tagged in on this candle on this 11 o'clock, and by 11:01, we're out of there. That's a scalp, all right? That's a scalp. In my eyes, this is a scalp. Even though I'm a day trader at heart, this is a scalp in terms of where I took profit, right? If I held, right, and targeted maybe potentially previous day's equilibrium, okay, because we are basing this off previous day's low, maybe then that would be a day trade, right? But for me personally, this is like a quick scalp. For now, anyway, based on my risk tolerance and my risk parameters, that's all I got. That's all I can do. I'm okay with that, right? I'm okay with that. Make sense a little bit? Make sense a little bit? Is sense being made here? Is this thing on? Gotta make sure. Okay, it's on. It gave me what I needed. Whatever it does now, that's on you, mate. You do your thing, mate. I got what I came for. Let me get that quick snapshot. Hold on. You're in a cell? Okay, okay, okay. All right, okay. Hell yeah. Retracement to the continuation. I caught the retracement, dies in the continuation. Let's go. Let's get it. Let's get it. Let's get it. I'm still watching this trade, right? I'm watching how price behaves in this inefficiency here. Yeah, I want to see it respect it. I don't have a really good order block in this leg here, really and truly. Potentially this one here, but it's not super clean. Did they smash it yet? Did they smash it yet? Or it looks like it's this candle's low, maybe. Okay, not yet, not yet. Need just a wee bit lower, just a wee bit. We ain't asking for too much, just a little bit of downside movement. We've closed below the mean threshold, not mean threshold, constant encroachment of this inefficiency. So that would be a warning sign if you were still in this trade here. Doesn't mean close the trade yet, right? Just means potentially you could be offside. Still don't know if I have a clean OB here. I'll be using this one, but it's not super duper clean. But let's smash that take profit. Put W in the chat when it hits it. Put the W in the chat. Was that a 5-minute OB you framed that on? Or something higher. It smashed down it. Yeah. Okay, yeah. I see this one, right? Right here. What time is this? 9:40. 9:40. Smash a ruby. Smash. See how we can take two different directions and still both get our targets taken. That's the beauty of this industry, man. One person can be buying, making money. Another person can be selling and making money. Like, it's an open market, bro. Like, it's beautiful, man. It's just a tapestry of just beautiful up down movement. You can capitalize on the up, you can capitalize on the down. Oh, beautiful. Oh, I was gonna get my screenshot. Sorry. Damn, I should have got my screenshot before it looked this ugly. But it's okay, it doesn't matter. Profit is profit, innit? I should have got my screenshot before I started looking this ugly on here. Let me get it. Let me get it. And 10, 11, 10. You hit your take profit, right? Die. Put the W. Put the W. I think tomorrow we're gonna tape read. I'm okay for the week. I'm gonna tape read. Both accounts are up on the week. Tomorrow I'm gonna have a tape reading session. I'm saying it now. Remind me tomorrow. We're just tape reading, okay? I'm not engaging. I'm not getting in. We're just gonna tape read tomorrow because I've had a good week. I don't need to slow and steady. You know, I don't need to push anything. Even though I could, I don't need to push it right now, right? Right now, at my development level, I want to just reward myself for doing good things, right? I don't want to keep, hey, W's in the chat for the winner chicken dinners. Winner chicken dinner. I'm going to talk you through what just happened here. So I took this retracement setup to -1. Right there, it gave Dai a continuation sell setup. And she took it to where my stop loss would be on my trade. Just Just beautiful. We're going to do a trade performance review in a bit here. How many trades this week? Monday, loser. Wednesday, Tuesday, winner, chicken dinner. Yesterday, 2, winner and loser. So where we at? 2 for 2. And today, 3. So, what is that? 3 for 5? What am I saying, bro? That's 5 trades, right? Yeah. Monday, Tuesday, Wednesday we took 2. Today 1. 5 trades for the week. Yep. Yeah. Patience pays, right? It pays to be patient. She said she waited for that patiently. She sat on her hands. She said, I'm waiting. I know where I want to get in, right? I know where I want to get in. I know in the direction of where I'm taking price. So I'm just going to wait for price to come into the cross errors. Wait for price to come into the cross errors. And then you know what? Once it crossed that dot line in the middle, you know what? You don't hesitate. You don't hesitate. You pull the trigger and you let the outcome be out of your hands. Okay. Some days you miss, even though it's in the cross errors. Some days you miss. The wind, whatever's going on in the atmosphere is just different, right? It is what it is. Anyway, what I did well today is that I showed up. All right, I got 1% better, gained experience, learned lessons I'll take into my next trading day, next trading session. We were really inside the range trading, so I was using other ranges, right, to confirm what I wanted to do in the price action. And I used previous day, the last 3 days low, all right, to catch that retracement set up here, okay, to then for die to then catch the continuation to the downside, okay. So showed up today, followed my procedures and protocols, didn't deviate from it, waited patiently for my setup to present itself after the time that I was looking for it, right? After the time I was looking for it. And it did what it needed to do. Outcome out of my hands, right? Where I fought short today, I woke up at a decent hour. I got my morning routine in, okay? Chart-wise, showed up, did what I needed to do, didn't deviate from anything. So I'm happy and pleased with my performance today. Don't think I fell short anywhere. Pat myself on the back, because yesterday we did fall short on our wake-up time and our routine, okay? So, but today we got it in. So, hell yeah, pat yourself on the back. Good job, baby girl. How I can improve for next day, next trading session is keep showing up, right? That's step 1. Keep showing up, because Dai's been showing up every day for herself, and she's in the chart. She's collecting the data. Everything is starting to click. It's starting to make sense. She's starting to see what she needs to see in the chart, right? That she's comfortable in to get in the trade with. Not what I'm looking for. Not what I'm looking for in the chart. It's about what she's looking for, right? It's not about me, right? It's about her and what she's looking for, when she's comfortable to risk and what she's comfortable to sit in a trade for, right? So don't just use my experience. You're here using my experience, my data. No, 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 no. DIY, mate. DIY. Do it for yourself, right? Do it for yourself. Collect that data. Build that confidence for yourself, because you cannot use my confidence and try to imitate and use it as your confidence, because you haven't collected the data. You don't know what I'm willing to risk, in the trade too. You don't know based on my data collected, right? So do your own work and keep showing up for yourself, because eventually, right, it will all start to make sense. Keep taking small steps in the right direction. All right. Don't let short-term adversity, losses, series of losses deter you, distract you from what you got going on. Because you can hit a period where you're just taking loss and you just feel deflated. Like I'm not getting it. It's not making sense. Just keep showing up. Just keep showing up. Just keep showing up. Right. Just keep swimming. Just keep swimming. Right. Keep taking small steps in the right direction. Eventually, we'll get to our destination. Right. We're not trying to get there today. We're not trying to get there tomorrow, next week, next month, next year. But we're just taking small steps, right? That will eventually lead us to where we're trying to go, right? That's the 1% club. Let's not lose sight of that, okay? Here we're working on joining the 10% of traders who succeed. But once we join those 10% who succeed and we're consistently being profitable, right? The goal is to fast track our way to the 1% club, right? And in order to do that, you need to know how they think about money, what they do with money, okay? So don't lose sight of where we're going here, right? We're not here to join the 10% to buy cars and live a luxury life. Yeah, when your passive income can afford that life, then live that life. But until then, our goal is to get passive income, right? Money, where we put our money to work for us, right? Our money works harder than we did to make that money, right? We're not having to do anything. We're putting our money to work like fucking slave that it's supposed to be, right? It's supposed to be a slave. It's supposed to put money to work, okay? Anyway, that's it from us today. All right, solid session here in the morning. Won't take anything away from it. Walking away with a win, but that's out of my hands, out of my control, right? My only judgment here is that did I show up? Did I follow my procedures and protocols? All right, and did I stick to my rules and my my parameters that I set for myself, which I did. So it's a good session for me. Whether this trade was a winner or a loser, it still would have been a good session for me. Okay. I'm not basing the wins on how my sessions goes, right? Or the losses on how my session has been. It's about following the procedure protocols and the processes and just doing the same thing over and over and over again, right? Anyway, tomorrow we're ending the week. We do have medium impact news at 9:45. We have news, okay? So we'll be here kicking off tomorrow at 9:15, right? Well, like I said, we're going into tomorrow in a tape reading session. I've had a decent amount of trades for the week. I'm ending the week on a high. All right, I've taken my small cookie from the market. I'm not going to go into tomorrow looking to take more at the market, okay? Because it will suck to take a loss on a Friday, go into the weekend, and end in your week on a loss. I'd just rather end on a high and just be content with enough, okay? That's one of the hardest things to do in the beginning, being content with enough. Because you're like, oh, I can keep doing more. Oh, there's more sales. I can keep going. No, 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 no. Be content with enough, right? You won this week. Go into the weekend being a winner. The market didn't get you this week. You won. So enjoy the weekend, right? But anyway, I'm not saying enjoy the weekend. Show up tomorrow though. Be here tomorrow. We're tape reading tomorrow, okay? Me personally, I'm tape reading. Doesn't mean that you have to tape read. If you see something you want to engage, hey, go for it. As long as it's following your procedures and protocols, but just be content with enough. Like I said, if my first 3 days of the week are good or the first beginning of the week is good, there's no need for me to really be in the last 2 days. I only took a trade today because Monday wasn't really that good for me. Yeah, Monday wasn't good for me. Maybe 2 days, 2 days out of the week, good days, we're done. Anyway, let's wrap it up. Let's wrap it up. We'll be back tomorrow. I also want to touch on this. It's a bit confusing in here, right? It's back and forth price action. This is really not a condition if you're new that you want to be trading in. Wait for dealing range, okay? One side of the dealing range to be taken and establish a daily condition, okay? If you don't have experience, you're gonna wreck yourself in this price action here, okay? And it's because we haven't established for the day anyway. We haven't established a side that the market wants to be on, okay? If you're using other ranges, different story, and you have to understand those other ranges, different story. But based on our daily condition, would be inside of the range, and this is the lowest probability setup, so you can engage in inside of the range, okay? Doesn't mean you can't do it inside of the range, right? You just understand that it's a low probability setups inside of the range. Anyway, let's wrap this bitch up. See you all. Appreciate you guys tuning in today. All right, always appreciate you being here, supporting this journey that we're on. Okay, it's not just my journey, it's our journey. Okay, we're going to the top 1% of the wealthiest people on this planet, and we're going to do that through the means of what they're doing. Right? They're using it through funds. Right? Central banks are controlling the supply of money in the open market through hedge funds. Right? They have their own funds that they're using to control the supply of money in here. Okay, so that's, once I realized that, I'm like, yeah, that's what I'm gonna do. That's what the titans are doing. Titans of this world, by the way, just this world. That's what they're doing. That's what I'm gonna do, right? I'm gonna follow in their footsteps. I'm not gonna fight them. I'm gonna join them. Okay. So, yeah. Anyway, enough of that. Anyway, we'll see you tomorrow. Appreciate you guys tuning in. Yeah, let's wrap it up. No condom. Deuces.
Before we wrap up, I want to leave. There was a trading session and still feel lost. Even on days I made money, I didn't really know why it worked. And on losing days, I had no system to fall back on. That's the difference between guessing and having a real edge. And here's the truth. Most traders only focus on entries, but consistency comes from the system behind the entry. So if you've been watching and thinking this makes sense, but I don't have the full system yet, that's exactly why I created the 10% to 1% club. That's where we go deeper into all three pillars: the full model, the risk management system, the money and mindset principles needed to join the 1% club, and the exact process to follow daily. If you're serious about becoming consistent, that is your next step. I used to think the goal was to win more trades, but the real goal is to become the type of trader who can perform no matter the outcome. Because once you have that, the results will follow. That's all for today, folks. Thank you for tuning in. I'll see you in the next AM session, kicking off at 9:15 a.m. Kickoff once again at 9:15 a.m. To be on time is to be late, okay? So make sure you show up early. As always, I'm the trader here, signing out. Good luck, good trading, happy bloody hunting. Remember, you only fail when you quit.